Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method. Today we're going to look at key buy and sell levels in the market. In this episode we're going to forward project to the end of April, looking at the bearish, the bullish and the neutral case. On Bitcoin, the S&P500, the US dollar currency index, the DXY, and gold. To gain insights not found anywhere else on YouTube, please like and subscribe and become part of our global CTKS family. We'd love to have you here. We do deeper knowledge dives inside the CTKS Masterclass. Links are in the description of this video. Let's run the numbers. People want certainty. We know that financial markets are probabilistic. They're not certain. To create certainty, we apply three-dimensional risk management, and yesterday on Bitcoin's price, we mapped out three potential paths for Bitcoin. Bitcoin is a risk-on asset and a very, very good pre-estimation of what the main markets could do. In yesterday's video, we mapped out an up course, a neutral course, this white line, and a down course, this red line, and we saw the market went red. Rule 252 from the Masterclass is very, very important. Prepared and not scared. You can be prepared and not scared by doing your three-dimensional risk management code each and every day. There was a greater probability that we were coming down because we saw a cut in the risk-on indicator. We can see that the risk indicator has continued to come down, indicating that there's a lot of heat in the markets and it's chilling out rapidly. One thing to understand, price is always moving in a wave. That's rule 4. The S&P 500 is actually coming up to a short-term, temporary support level. It'll be interesting to see what happens from here. Unfortunately, with Bitcoin, it's throwing a different message. Bitcoin recently has cut multiple times. That means there's negative momentum inside Bitcoin, which will likely flow through to the main markets. Because Bitcoin is so risk-on, people when they get scared are very likely to drop their Bitcoin holdings first. They're also likely to pump their Bitcoin holdings when things improve, so just be aware of this factor. Always beware of the retest. Please let me know in the comments, what does that actually mean? Beware of the retest. The markets reward your active learning. The more you actively learn, the more you get in sync with the market and the more the market pays you. You are paid for your synchronization in financial markets. We need to understand these interplays in order to stack the probabilities in one dimension or another. Of course, we cover all three off, but we want to think which is the likely one. Before we get into some key levels, we need to gain an appreciation of what the market is doing. We saw a slight spike up in the VIX, which put pressure on the major indices. The decrease in yields is all about people buying into bonds. When they buy into bonds, they fear a recession is coming. It is literally a flight to safety. We saw some upward price momentum inside gold, but at the same time, just pay attention to what Bitcoin is doing. You can see the correlation between Bitcoin and gold right now is very, very strong. We can also see that the DXY is starting to bottom out. If it actually continues up and rallies, that's going to put pressure on the precious metals. It will put pressure on the major market indices, all the stocks and all the alts. The DXY is really important to understand. We can see recently that oil has traced back. Rule 4 is a critical one to understand here. Price moves in waves. When we're looking at key buy and sell levels, let's start with Bitcoin because we know that is highly, highly risk sensitive. If there's a lack of confidence in the main markets, Bitcoin will feel it first. If there's confidence, Bitcoin will feel it first. Thank you to the people who reached out from yesterday's video and said this three-dimensional thinking shown on the chart is really, really helpful. You could see as price just did its thing, it wasn't going in the positive direction. So that probability became less and less as it actually came down. For a while it could have been going neutral, but having such quite a big sell-off here, the probability was more negative, and that's actually what happened. Remember, always keep thinking in terms of 3 dimensions. Don't just do one. A lot of people said the Bitcoin bull run is on. Bitcoin is guaranteed to go to 150,000. I agree, Bitcoin is guaranteed to go to 150,000. The key is when. If you put all your money in, and please don't ever do that, but if you did, and Bitcoin halved before going to 150,000, there's a good chance that you could get caught in capitulation. Why do we do the CTKS method? We need to understand where price can increase to and price can get supported if it falls off a cliff. And price is always falling off a cliff or always exploding right across every financial asset class. One quality that all charts share, the price is always pinging between smart money sell levels and smart money buy levels. Keep this in mind, it's money in the bank. Yesterday we talked about that smart money buy level between $27,843 and $28,038, and it actually came down, Bitcoin came down and tapped that level. Admittedly, it tapped the upper component of it, which is fantastic. This shows a little bit of strength in Bitcoin. And we can see at the moment, Bitcoin is starting to gather some momentum. It's starting to cross over some very, very short-term resistance. And I mean very short-term. But it's still under resistance from a little bit longer term. And when I'm saying longer, this is a 15-minute time frame. But the 15-minute time frame is very important to actually know when the market is turning. Bitcoin is currently trading at 28,256. Let's do our forward projections on tomorrow. If the VIX spikes, the DXY spikes and yield spike, we could be witnessing a negative momentum inside the market. Something like this could occur, where we come down and drop through to around 27,576 and then come up and retest at around the 27,826 mark and then violate, oh, that sounds bad, this smart money buy level around the 27,339 level and make our way down. If the S&P500 does a technical bounce, we may see positive price momentum and a lot of shorts getting liquidated. We may see Bitcoin come up to around the 28,611 mark, just wobble around and then try to take out the 28,911 mark before pushing on to around the 29,287. And then I would expect, if it got up there, starting to liquidate a lot of shorts, we could get really, really interesting price momentum to the upside. If the bulls and the bears are equally weighted, we would expect to go flat and to go horizontal. The key buy levels in Bitcoin, and Bitcoin is currently $28,280, are between $27,843 and $28,038. That's the first smart money buy level. The next smart money buy area is 27,312 to 27,390. The next smart money sell level is between 29,957 and 30,166. A very big thank you to Built to Spill. It's nice being prepared for the market swings. So much stress is believed. Positive excellence in action. Thank you, my friend. We're going to use three-dimensional thinking and the CTKS method. I've turned off the levels because they become a little overwhelming if you don't know how to read them. And I just want to let people know that the CTKS service will be starting up soon. For the longer-term trader or the investor, this is out to the end of April. What I've done is to predict 3 paths. The nature of price can be exponential, so I've done a moderated approach. But just be aware, it could drop off far more and increase far more as well. You need to be aware of these things. If we think about price just going flat, we would expect it to wobble up and down between around the 28,700 mark and below that to the 27,700. Just get caught in a channel until the end of the month. If we're anticipating a conservative bear case, I think we could see something like this. Price coming down to around the 26,000 mark, just wobbling around, making its way down to the 22 23,000, and then just coming up, doing a bit of a technical bounce to close out at around 23,500. If we see a conservative bullish case, I believe the price will come up to around the 30,150 mark, wobble around there, just get a little bit above to the 31,400 mark, just wobble down to the 30,200 and make its way up to around 30,120 by the end of the month. And it's going to be really obvious which one of these cases, if not another case, will become very, very apparent. That's why it takes so much stress out of the market to do this. I invented this methodology, this three-dimensional risk management, to help you. And thank you, Brett, for your very kind comment. Brett said, the financial markets are not easy, but with the CTKS method in your daily videos, you have taught it in an easy to understand and step-by-step way. Thank you, my friend. If it's your first time visiting our global family, a very warm welcome. And when I talk about the CTKS method service, I'm talking about this one at the ctksmethod.org. For the Masterclass students, it's really important you keep up your daily video watching. I'm always inventing new and improved methods to help you out. That's literally my job. I am an inventor. I've been one my entire life. That's why you'll gain insights here not found anywhere else on YouTube. Let's do a similar estimation out to the end of April on the S&P 500, taking our three cases into consideration. What are the key levels that we're looking at? If the market goes basically flat, goes horizontal, we would be expecting the S&P 500, which is currently 41.29, to come down to around 41.06 or 05. And then oscillate between there and 41.39, just staying in that range. If we see a negative bearish sentiment coming down to around the 40.75 mark before a little bit of a retracement, and then making our way down to the 39.84 mark before trying to consolidate up but not breaking that resistance, and then finally coming down to around 39.49 to potentially end out the month around 39.88. This analysis is formed by understanding the CTKS method and the Stanfield zones and Stanfield levels inside market structure. With the CTKS method, we always look at objective dynamic market structure. What about a bullish case? We would expect price to come up and probably to first encounter resistance around the 41.60 level, just oscillating a bit before making its way up to around the 41.83 and then up to the 42.19 before getting stopped out basically at 42.75. There's an absolute mass of structural resistance above that figure. But without the CTKS method, you will not see market structure. Market structure should be the first thing that you look at. Please let me know in the comments, do you find this kind of analysis useful? Is it helpful to you? By doing our three-dimensional analysis, we actually apply Rule 252, prepared and not scared. It becomes very apparent which way price is going. And because we decide ahead of time what we're going to do, we don't have that stress in the market. To round out the analysis, let's look at the bearish, the bullish, and the neutral case on the DXY until the end of the month. And these are fairly conservative estimates as well. We're not expecting the price of the DXY to just follow these lines to a ping. We just want to get an idea of directional bias. The DXY is currently 101.818. Looking at a flat or neutral scenario, bounding between the 101.707 and around the 102.070 mark is on the cards if we just consolidate. If we're thinking about a bearish scenario where the DXY comes down, and a bearish scenario for the DXY is a bullish case for equities and Bitcoin, and especially gold, because we'll probably get a flow through to yields. In this case, the DXY coming down to 101.286 first is on the cards. then down to 101.024, then 100.355, to potentially bounce from the 100.115 level and close out the month around 100.471. If we look at the bullish case for the DXY, which is the bearish case for equities and Bitcoin, if we see yields rising while the DXY rallies, and we most likely will, that could put negative momentum on gold. The first level is around the 102.225, then up to around 102.774, then 103.159. There's a very important structural level above this 103.574 level, and if you're doing the CTKS method, you know what that is. Our community has been asking for a longer term perspective. I hope this helps out. I'd like to do a special call out to Edwin. Edwin was absolutely on fire in yesterday's and the previous day's comments. Well done, Edwin. Yesterday on gold, we estimated the 24-hour flat, bullish and bearish scenarios. We can see that gold was basically trying to go bullish but was suppressed and ended up going mid-range between the bullish and the neutral case. This is something that you want to always bear in mind. It doesn't have to go bullish, doesn't have to go bearish. It can go somewhere in between. But at least you know it wasn't going bearish, and that was pretty apparent by what was happening inside price action. What caused the problem with gold? It was the very extensive smart money sell level between 2014 and 2025, which pushed negative momentum into gold. Gold is currently trading at $2,000. Looking at the bullish, the bearish and the neutral case for gold out to the end of the month. With the bullish case, gold could finish at around 2047. The neutral case would see gold closing out the month at around 2005. The bearish case, gold could close around the 1973 level, with a potential low around the 1956 level. Again, these are all conservative approaches to price prediction. If we get chaotic or big spikes down or big spikes up, that shows panic. We do the conservative approach because we don't want to do the panicked approach. We want to detect panic, not be part of it. Please let me know in the comments, are you bullish, bearish or neutral gold? And even if you don't trade gold or invest in gold, you must keep your eye on gold. That's why you must keep your eye on Bitcoin if you're not even in it, and the S&P 500 and the DXY. They're critical to observe. Please let me know, are you bullish, bearish or neutral on gold, Bitcoin, DXY and the S&P 500? The market will reward your active learning. The more synchronized you get, the more money that you will make, and the more probability of being a financial blessing to yourself and those you love. You are paid by the markets when you're synchronized. Active learning is the key to synchronization inside financial markets. The CTKS method is also taught inside the Masterclass. One thing that we do as a global family, we always solve our problems with positive excellence. And a big part of that is either winning or learning and never blaming. The markets are very volatile by nature, especially the crypto market, but they're all volatile. If you've found yourself on the wrong side of the trade, and potentially the wrong side of the percentage, it's important to be really kind to yourself. It's just a learning experience. The more painful the learning experience is, the harder it is to actually learn. I thought in the comments today we could talk about learning. How important is learning? Not just in life, but in financial markets. I'm really looking forward to your discussion. Have a great day or night ahead, my friends, and I hope this video has helped out.